South Africa's non-farm payrolls have fallen. Employment fell 1.2% quarter-on-quarter in the 3 months to end September, while on an annual basis, the job market shrank 2.7%. This is largely due to losses in the community services industry as well as manufacturing and mining. Analysts, business people and trade unions have lowered their inflation expectations through to 2026 to the midpoint of the central bank's inflation target range. That's according to a quarterly survey. The findings are likely to encourage the Reserve Bank to forge ahead with its monetary easing cycle, potentially by cutting interest rates in larger increments. Some analysts believe there is room for a 50 basis point cut at the next policy meeting in January. Growthpoint has unveiled plans to begin a major residential and retail development in Sandton. This in collaboration with renowned luxury residential developer Tricolt. Dubbed Olympus Sandton, the mixed-use project has a price tag of over 2 billion rand. It will cost of 2 towers, a 26-story residential tower and a 16-story tower to the east, sporting premium dining experience by Marble Hospitality Group and convenience retail on the ground floor. The investment supports Growthpoint's vision of developing the country's top walkable mixed-use precinct, leveraging Sandton's position as the continent's leading financial hub. Bidvest is rejigging its portfolio and so plans to exit 3 of its businesses. The first division on the chopping block is Bidvest Bank. The firm says Nigerian-based Access Bank will snap up the asset. The deal carries a price tag of 2.8 billion rand. Bidvest has also reached an agreement to sell Fin Global to Momentum. That deal still needs regulatory approval, and the third business Bidvest is looking to offload is Bidvest Life. The company has binding offers for that unit and believes that agreement will be forthcoming in the next few weeks. Pan-African Resources expects a jump in gold output in a preliminary operational update for the half-year ending 31 December. The miner says it expects production of the yellow metal for the 2025 full year to increase by around 16%, while guidance for 2026 shows a further improvement. This will be driven by steady state production at the Mogale tailings retreatment operation, as well as increased output from Evander Mines underground operations. By February next year, the group expects to be materially unhedged, which will allow it to benefit from the spot gold price. And taking into account the current gold price, Pan-African Resources could de-gear fully in the next 12 to 18 months. Subdued, that's how CAP has described trading in the 5 months to end November. The Diversified Industrial Group says that's as positive sentiment from a number of events are yet to filter through. Those being the formation of the Government of National Unity, reduced load shedding and lower inflation. Given the situation, the firm grew revenue during the period thanks to increased production capacity and market share gains. CAP will open its books and report half-year results on the 27th of February. The partnership between government and big business to tackle crime and corruption is gathering steam. The banking sector has bowed to the Hawks' request to arm its investigators with specialized skills. This will help them go after money launderers and other financial wrongdoers. And new ministers and deputies added to the cabinet in the Government of National Unity will cost taxpayers an additional 239 million rand. This is according to Finance Minister Enoch Godongwana in a parliamentary Q&A session. The new cabinet size has been met with criticism since its formation in July. While President Cyril Ramaphosa had planned to reduce his executive, the GNU resulted in the cabinet expanding from 30 to 32 ministers, from 36 to 43 deputy ministers. Action SA MP Athol Trollip says it's an outrageous financial burden on already overburdened taxpayers.